Hello and welcome to the day ahead. It is Thursday, April 14th. I'm Andrew Gagan. Well, global equities have shaken off hot inflation prints. Wall Street ending on solid ground thanks to a surge in growth stocks, with earnings season officially underway in the States. Sliding US Treasury yields helped boost the tech-heavy Nasdaq, with semiconductors the best of the bunch. Red-hot producer price data not enough to offset the positive momentum after the March index showed prices surged 11.2% on a yearly basis, its biggest annual rise since the data was first calculated in 2020, November of that year. First quarter earnings were a mixed bag. Economy bellwether JPMorgan reporting a 42% plunge in profit, a miss on market expectations, and a stark contrast to the record profits seen in the same period a year earlier, driven by a sharp decline in investment banking revenues. Chief Executive Jamie Dimon prefaced the results weeks ago, warning of economic uncertainties arising from Russia's invasion of Ukraine, forecasting up to $1 billion in losses directly related to the war. Well, better story for Delta Airlines, expecting a return after a smaller than expected first quarter loss as travel demand resumes, with robust consumer demand boosting profit and offsetting soaring fuel costs. Consumers, however, are expected to bear the brunt of rising costs, with data showing the average airfare for Delta customers is up 33% from a year ago. Looking ahead, the lenders continue to take centre stage, with Wells Fargo, Citigroup, Goldman Sachs and Morgan Stanley all hounding down numbers tonight. EPS forecast there on your screen. Elsewhere, Tesla chief executive Elon Musk in hot water again with the law, with a class action filed by former Twitter shareholders who say he waited too long to disclose his 9.2% stake in the company. Under US law, shareholders are obligated to disclose when they acquire 5% or more of a company within 10 days. For Musk, that would have been March 24th, and the share stake wasn't disclosed to the market until April 4th. Well, taking a look at the day's currency plays, the greenback continuing to ease from two-year highs as investors shrug off yet another hot inflation read in the States. The yen paring losses, while the loonie rallied after the Bank of Canada hiked its benchmark rate by half a percentage point to 1%, the biggest single move in more than 2 decades, with a promise of more to come to combat soaring inflation. Governor Tiff Macklem echoing the central bank peers, highlighting the uncertainty and economic impact of the continued war in Ukraine.
Inflation is too high. It is higher than we expected, and it's going to be elevated for longer than we previously thought. And third, we need higher interest rates. Our policy interest rate is our primary tool to keep the economy in balance and bring inflation back to the 2% target. This morning, we raised our policy rate 50 basis points to 1%, and we indicated Canadians should expect further increases.
So tonight the focus will be the European Central Bank ahead of its policy decision, the euro reversing course in an overnight session and turned positive ahead of that key central bank meeting. While the market isn't anticipating any change to the official cash rate, the ECB has a more hawkish tone in the statement as expected, which would tee up a rate hike later in the year. Futures are priced in a near 70 basis point hike by December. Positive investor sentiment re-energised the crypto market. Bitcoin up around 4.5% to take it above the $41,000 handle. However, it's still down around 13% since the beginning of April. To the local market, and at the end of a week shortened by Easter, shares are set to open positively, with the SPI futures up around 0.25%. Global oil prices rose on further signs of global supply deficit overnight. This is despite the International Energy Agency lowering its demand growth estimates because of China's COVID lockdown. Brent crude up around 4%, edging back towards $110 a barrel. Gold futures up 0.4% to $1,984 an ounce. And China's COVID restrictions continue to weigh on the iron ore price, futures sliding around 1.5% to $153 a tonne. And on the corporate front locally, Bank of Queensland releases its half-yearly results this morning with an expected increase in its interim dividend. And trading ex-dividend will be coal miner New Hope, as well as Diverger and Spheria Asset Management. And that is your day ahead. Enjoy Easter. We'll see you again Tuesday.